Welcome back to my channel. Today, we are covering one of the most anticipated real estate IPOs of the year, Sri Lotus Developers and Realty Limited. With a 792 crore issue size, strong anchor participation, and a Mumbai luxury focus, this IPO is creating a buzz in Dalal Street. Let's break it down. Facts, financials, risks, whether you should apply or not. Let's start with the basics. This is a 100% fresh issue, no offer for sale, with a total issue size of 792 crores. The price band is rupees 140 to 150 per share, and the minimum application is one lot of 100 shares, meaning an investment of around 15,000. The IPO opens on July 30th, closes on August 1st, tentative listing is on August 6th. This company, earlier known as AKP Holdings, is a Mumbai based real estate player. Their specialty? Ultra luxury redevelopment projects in the city's posh areas such as Juhu, Bandra, Andheri, Prabhadevi. Instead of acquiring land, they work on joint development agreements with housing societies, an asset light model that improves margins and reduces risk. Now the numbers. Financial year 24 revenue stood at 550 crore from 462 crore last year. And the impressive thing is, profits doubled to 228 crore with EBITDA margin over 50%. This is very rare in real estate. This company is nearly debt free and showing strong operating efficiency. Ahead of the IPO, the company raised 237 crore from anchor investment. Big mutual funds such as SBI, Tata, HSBC, and Nippon India came in. And here's the fun part. Pre-IPO shares were allotted to Shah Rukh Khan, Amitabh Bachchan, Hrithik Roshan. This celebrity endorsement adds both brand value and public interest. Where is the IPO money going? Around 550 crore will fund ongoing and future projects. The rest is for general corporate expense, no debt repayment, which signals their clean balance sheet. Let's look at the strengths. Focuses on luxury redevelopment in Mumbai's high demand zone, assets light, capital efficient model, strong anchor and celebrity pre IPO interest, high margin, and strong financial growth. It's rare to see such a lean, profitable real estate player hitting the market. But don't ignore the risk. Heavy reliance on Mumbai, no diversification, sector is cyclical, affected by interest rates and approval. At rupees 150, the IPO is priced at around 30 times the financial year 25 earnings, which is slightly expensive. Also, CRISIL has given it a 3 out of 5 IPO grade, suggesting average fundamentals. Now the market buzz. Grey market premium is around rupees 30, which suggests a 20% listing gain. Brokerages are positive. Overall sentiment is strong, but pricing remains a watch point. So, should you apply? If you believe in Mumbai real estate and want a niche exposure to luxury redevelopment, this could be a solid long term bet. But keep an eye on listing volatility and avoid FOMO. As always, do your own research, read the red herrings prospect, and invest smart. If you found this breakdown useful, smash the like button, subscribe, and drop a comment if you are applying for this IPO.